to the channel. It's been a couple of days. Been a little under the weather. A little sick in the head. So if I start little sneezing, you know what I'm saying? It's just because like allergies are kind of perked up right now. But yeah, let's have a good day today. So I'm gonna clear out the chart. It's currently Tuesday. We're gonna go over Monday's trade real quick. Forgot to record it yesterday. So today I'm gonna be talking about the trade that you guys kind of just watched, why I took that trade out of all the locations that I could have taken it, and then how you can also find similar setups at home when you come into the morning every single morning and approach the market. So first thing I did coming into the morning on Monday was mark out this order block in this fair value gap. I wanted to see this bullish price action kind of trade into this order block. Okay, so that was my frame one. I wanted to see if we could find sellers up here, but first we had to find buyers to get up there. So I was willing to participate in an upside move or a downside move depending on how our 9:30 open reacted. We did have a reason for moving up yesterday. We have the sweep of liquidity right here, Friday into the end of Friday's session. This is the 2022 model. We have a low, a higher high, a lower low, then a higher high. We also created a order block. So on the 1 hour time frame, this is already a unicorn model setup for those who understand like ICT setups. So this is already a unicorn setup. We have an order block, we have a fair value gap, we're holding it, and this is how I use power of 3 in this instance to actually operate and take my trade. When I look at sideways price action like this, I can always almost confidently say that this is going to be some type of accumulation right here just because of how we're ranging. That usually entails that when we do have some opening volatility or a macro hit the time, so 8:30, 9:30, something like that, we're going to manipulate, and we're probably going to manipulate hard. So I was willing to take a short if we manipulated upwards all the way down to this 18,500. But instead, we opened up, we manipulated down first, and I was like, okay, that should leave us enough room to trade all the way back up to 18,790. Notice we didn't get there in the morning AM session, but overnight, we still ended up trading up into this level, which proved, everything held the way it was supposed to, and we got the price action that we were looking for. So this was the accumulation macro that I was referring to. And then if I just go ahead and zoom into the 1 minute chart, I will show you where the manipulation took place and then where the expansion took place if it isn't already obvious by zooming in right here. So let's get in here right here. Accumulation, manipulation, all the way down. Very, very strong bearish price leg is how you're going to be able to identify these. We are manipulating our price from this high all the way down here. This is the teller. So we have a high, we created another high, okay? By side, so. We have a high, we have a lower low, and then after that, we make a higher high. So this is our 2022 model. You need to be taking a long here, but AZ, where's my long setup? We didn't actually make the higher high till here. Now, this is how we can use a little bit more of an advanced ICT concept to basically show you that, this is the correct trade that you want to be taking today. So the tell is the time. For me, I trade the 950 macro, and as soon as the 950 macro opened, we had a super, super bullish candle. This thing moved, let's just count it from the bottom, 50 to 80. Around 30 points in this 1 minute candle. So that's super, super bullish order flow. I'm not gonna leave that unaccounted for. I'm gonna be taking that into account for everything else that happens. So I wanted to see, after this super bullish candle, would we sweep sell side one more time and hold this price action? We ended up sweeping the sell side, holding the 1 hour order block inside of a 1 hour BISI, and then trading a little bit higher. Once we traded higher, the last thing that I said was if we traded through this inverse fair value gap and started to support it, this would be enough for me to get in long, and that's exactly what I did. As soon as we dipped back into this fair value gap, all I did was set my first target to the 930 manipulation high. It's about 100 points away. Start cleaning up this mess real quick. So it's about 100 points away. This is the high that I'm referring to. Now, just to be more conservative, you know what I mean? This was very, very fortunate that it was super efficient from low to high here. But for a person who's coming into the market, you know, I didn't really know if we wanted to trade higher or lower, but we had a bullish setup, so I was going to take it. The first thing that I did was say, hey, I'm going to draw out this 930 manipulation high to low, and I want to just observe price action around this OTE of this candle. A lot of times markets like to dip lower, rebalance, and then move lower. In this case, we had a bullish setup, but we are only bullish until certain points. So if we, you know, traded up into here and started to reject, I could have anticipated that we moved lower for the session, but we didn't. We traded completely through it, and then all I did here was scale off on first signs of weakness. So we came up into this order block around 70 points, so I scaled off 3 here. And then after that, waited and we traded into this level right here. I added 5 contracts right here, only because I just drew out this price leg and we dipped straight into the 50%, and then our body closed above it. So I was like, okay, that's an add. And then we started spooling higher, and I left the runner for the rest of the session. So yeah, guys, that's basically how I decided to approach the market on Monday, only using power of 3. Super simple setup. You can definitely find that stuff at home. Just do yourself a favor. When you're coming into the market and you have no idea what's going on, look at prominent times: 3 o'clock, 4 o'clock, 8:30, 9:30, 10 o'clock. Those are the times that as a New York session trader, you want to be paying attention towards most. Are we setting highs at important level? Are we setting lows at important levels? If yes, use that to frame how we're going to operate within today. All I had to do for this day was look at the 15-minute chart and see, you know, I really don't like this price action. I want to see this return over here to this 1 hour high quality area, fair value gap, order block, and after that, I just waited for price to kind of do its thing here. And that's the key, guys, waiting for price to kind of coincide with your thesis. Is price supporting the fact that we want to move higher? How do you know that? Well, we have 3 steps here. You need to wait for the high, you need to wait for a lower low, and then a higher high, and then a fair value gap. It's the 2022 model. It's the most bread and butter thing that you can do. And when you pair it with power of 3, there's a lot of money on the table a lot of the times. Hopefully you guys enjoyed the video. If you guys have any questions, you know, go ahead and comment in the description. Appreciate you guys for coming back. I know it's been a little minute since I've been here, but you know, obviously I'm a little under the weather, if you guys can't tell from my voice. Just trying to make it happen still. Hope you guys are enjoying the content. I'm gonna be pushing out some more. It's currently Tuesday. Market's about to open in 30 minutes, so I'm gonna get right back to it.